Captain.
Good morning. Yes, sir. Good morning, MMTs. It's a fine Saturday morning. Why? It's 6/11 and it has a nice little ring to it. 6/11/2011. Got 11/11 in there now. We're going to talk about today the Dow Weekly in our platform. And the MMTs, prior to this video even being made, have gone through one good learning curve on how our platform works and how to gauge indexes. This is a daily of the Dow, and just to let people understand is where the Dow had been selling and how these last up days, meaning that this bar right here was positive 63 handles above the half of this move, but then the next day we closed minus 164 handles below that, the half point of that bar, and it fell off that cliff down here on that Dow on that daily level. And basically when we get over here into a weekly level, we can clearly see that the blue line is a 20-week moving average, a 10-week moving average, and the red line is a 20-week moving average on our platform. One of the things that we can see here on a weekly level is that it closed 259.18 handles below the half bar. And that is a negative ratio. And you can see the negative half closing weekly bars for the last 3 weeks in total. The total count, in these numbers I'm talking about as we go through here, that closing half. So when we were up here, we had 3 weeks that were narrow range. This is what bull tops are always about. We called that top on StockMarketFunding.com. Brian Plain should be letting that make it where people can get that immediately before anything, so they can understand index top reversals and how you can be short selling the markets down. The weekly reversal top is in play. Now, let me show you something. This is a standard chart. That's a blue line as well. That's the 10-week. But let me tell you something. We haven't closed below the 10-week moving average on a closing level. You'd have to go back over here to year 2010. The difference here, where they were narrow range sell weeks, over here they're full sell weeks, 2 in a row below it. That's quite different when you come below a 20-week moving average over here. That's called diminishing pullback. That's not lots of selling, and you're slightly still hugging it here, and you pop up and you get going. That's where bears don't understand it. This is quite different. My MMTs, that double weekly reversal falling through these moving averages, is that when we were making bull rallies throughout the trend, these are all called bull rally tops. They make them higher and highs. But now it's no longer a bull rally reversal. It's a bull rally reversal with a potential bear market reversal from the swing high top. So it's important that my MMTs understand how bull and bears have characteristics and mathematical equations to their reversals, and how to read that public so accurately so that you know what to do intraday level, and the shorter term level could be 5 days, 10 days, up to 20 days, which is a full trading month. And you can see down here in the VO1 column that this sell through here was 470 total points intraday in the VO1 column. Top down, bottom up, it doesn't matter. It was 470 points on the Dow on 529. This last week, MMTs, it was 245 points from bottom up, top down, bottom up, the raw movement here. But you notice it's not as 470 like the week before. Why? Because we were going below that 10-week moving average and we were selling through the 20. Now, we, for the first time within this bull rally trends on the Dow, this is where changes potentially happen, and we're right there, my friends. And if that blue line crosses over there, and this is all public stuff, as you know, MMTs, right? Versus what our platform says. Because it calculates So you know how long the correction will last and how the correction will turn. The only way you'll ever know that, MMTs, is by going to your weekly platforms, as I've said on the Dow. That this platform here, that's your platform versus that standard chart in the background. This has got all kinds of things in here that tell you what to do intraday and longer time period and why it's so weak and why on this weekly down move that we can continue to correct. And there isn't any support here until you get to about 11.5. That's going to be that 50-week moving average, and that's been rising. So the shorter term is when, if I close 4 weeks below it, well, then there's an SMF secret about understanding indexes. And MMTs, you know what that is. I'm not going to go into that on the video because you already know what that is. The people that are watching the video for the first time, get your rear end over there, sign up for the free 5-day trial, get a grip, watch the index videos, get a grip on what we've been saying. Get on that. That is the place to be. I didn't say go to all of these other hack places and try to get answers. SMF has them because we did it before the move even happened. Now we are changing to a potential bear reversal instead of a bull rally reversal where you make higher highs. We're not quite there, but if we close below here for a certain length of time, that's when that comes into play, and you MMTs already know what that means. You already know what it means. Okay? So that's the Dow weekly bear reversal back to a support level. If we can, and this is the total weekly reversal, which is greater than that weekly. And it's a wonderful thing to have the wisdom to know the difference as to where your trend intraday momentum is going to be. You know when to be buying calls. You know when to be buying put options and call options. You know when to be buying long the name and selling twice the amount short, and why things go up and fell at resistances by understanding the indexes, whether it's the Dow or any key index or indices sector, is that you will have a clear trade management that goes with those, and why your entries are successful by understanding when bull rallies have weakened and bear rallies are starting, and the bear is more in control than the bull, and the bull is losing its steam within its rally. My MMTs, and until you get back above these lines, and if this thing crosses over the 20, we're going a lot lower. We could come all the way down here. This is depending on what kind of public technical damage happens to their psychic. That's those individuals. You don't own their behavior, but hell, down here is right 10,993. This is where the 2010 breakout occurred on a weekly level to that bull top reversal. And now this reversal here is much greater so far than the previous one. And I've always told people that reversal 2 will be longer than reversal 1 in a calendar year on any index component, that we teach all areas of the market. Not only do we teach that, but we even get right down to the very seed of it. And I can only tell you, if you ever want to learn how to use indexes to hedge your risk in your portfolio for the public, which I know you don't know how to do, if I were you, I'd get on over here and learn. Dow bear reversal, we break that support, we can continue to go lower. Price volatility will remain elevated. Short-term oversold on a daily level on the Dow. You can see the Dow here. That's the 200-day simple moving average. This is that next support right above it. It's a daily chart on the Dow. The Dow reversal that SMF called for, that Brian Plain should let people know that the longer-term trend structures on indexes, when we are calling market tops, is you better pay attention or you're going to end up in the boat like the rest of the public model is right now.